Hey guys, you've joined us live on Moneycontrol. I'm Manisha Gupta, and we're looking at metals. The plight isn't really good because we've seen constant profit taking on to this one. This actually is going to be a third straight week where we are looking at negative returns coming in for many of these metals. And every day there has been yet another trigger which seems to be pulling the prices down. Well, to begin with, the Chinese trade data, China retail sales, investments in properties, fixed income investment, all of those numbers came in on the weaker side, including the manufacturing numbers. And then, of course, the home sales numbers have been on the weaker side as well. And the other thing is that even as China has cut rates rather for a second time in 3 months, that hasn't really had too much of an impact onto the markets there. Also, the Fed policy minutes that came in yesterday do suggest and indicate that there could be yet another rate hike coming in soon because the inflation is still sticky and that's putting pressure on prices. The dollar index is now been trading up for 4 straight weeks. We are trading at a 7-week highs on this one. 103 seems to be holding, and that is putting pressure on prices. Add to that the fact that all of this isn't just about macro, because when you look at on ground as well, the overall inventories seem to be gaining as well. So that tells you that the prices are getting off their premium. There's really no demand in on ground, and much of these metals are finding its way into the exchanges. That is what is weighing on. I'll start with gold though, which is trading at a 5-month lows as well. We are trading below $1,900 per ounce onto this one. Remember, this year's high for gold is 2051, and we are trading at below 1900 right now. So it starts across board with the strength in US dollar index there. Within the industrial metals, copper is trading at a 7-week lows right now. If you look at the LME inventories, they have gained up by 52% in last 1 month itself. And we are holding inventories on LME at 90,000 tons for copper, which was as low as 37,000 as well at one point in time. So good amount of gain there coming in for inventories. Zinc clearly continues to be an underperformer. We're trading at a 2.5-month lows on this. LME inventories here have surged by 54% in last 2 trading sessions. So the zinc inventories now in LME are at a 17-month highs. I mean, this is from just about 2 days of global consumption of inventories to the kind of run-up that we've seen does tell you that there is no demand. Not just zinc, aluminum is trading at a 5-week lows. The Chinese production in the month of July saw a surge of 2%. And in this year, until now, we've seen a gain of 2.7% in sense of production. So pressure from there. And then you have steel, which is trading at a 2-month lows. In this year, the rebar inventories have gained up by 35%. So everywhere that you look, the story is the same. The inventories are increasing. Nickel is another one, trading very close to its 1-year lows now. Here as well, we've seen inventories and supplies gain up from China and Indonesia, both of those major producers. So the productions now seem to be coming back on surface. The cost of production, though, is on the higher side, but the cost of the metal itself seems to be declining. So it doesn't look so great, really. If you look at the previous quarter as well, many of the metal producers actually have seen slight losses or decline in their profits because the metal prices haven't really given them those kind of profits. With the way we are looking at things, you have the US jobless claim numbers coming in today. The dollar index seems quite supportive. If you do see dollar index going to 104 and 105, then there is further pressure that you could be looking at in many of these dollar denominated commodities. So the metal prices could really continue to be in soup for some more time.